All right, welcome everyone to a Story Trading Weekly Meetup, July 18th. We got special guest Mark Gomes on to talk about Aehr and IRIX. But before we do that, quick disclaimer: Story Trading is not an investment advisor. That goes for all of our guests, including Mark Gomes. Investing in securities involves significant risk of loss. This presentation, parts of it will be recorded, parts of it will be made available first to VIP members, and parts of it will then go on social media in the coming days. So just want to have that disclaimer up there for everyone. Before we get started, let's review what a story trade is. Story trading, the whole concept of story trading is to understand market pricing through the lens of the four pillars: fundamentals, catalysts, sentiment, and technicals, and thereby having a good idea of what the story behind market pricing and the trade is. Our upcoming app is going to be a place to discover, collaborate, and validate market moving information through crowdsourced research and social collaboration. So make sure to go to storytrading.com and sign up for our email list and the wait list for the private beta, which is going to be coming out soon. The two stocks we're talking about tonight, Aehr and IRIX, are both VIP picks. Aehr was chosen by Ashleigh Day and IRIX by Aaron Warwick. So you can go over to storytrading.com, hit that menu, click on VIP picks. You'll see all of our VIP picks historically and the performance over there. So tonight, again, Aehr will be going with Mark. He has a great annotated transcript of the Aehr earnings conference call last week we want to go over. We'll get his perspective on IRIX. He has a unique perspective to bring to the table, in addition to whatever it was that Aaron presented to us a couple months ago. We'll go over some upcoming VIP events, and we'll turn the recording off to go into our VIP-only Q&A. Talk about a little bit more on that Surfside disaster, see if there are any trade ideas there, and we'll go into trade of the week. So with that, first we'll do Aehr Test Systems. Here are some numbers. Last trade 340. It's up 33% since Ashleigh Day presented it on March 14th. It's up 24% since my trade update presentation on July 5th, and it was up 25% since last week when it was chosen as trade of the week. So with that, Mark, gonna take you off mute. What I want to just reference, harken back to, are the four pillars: fundamentals, catalysts, sentiment, and technicals. We talked about all of these in the previous couple presentations, but Mark, I wanted you to focus on fundamentals and catalysts related to what you heard on the earnings conference call and what came out of that report. So there's a link out there. So how did Aehr conference call impact fundamentals of catalyst? Storytrading.com/capital AEHR, the ticker symbol CC. That's a document Mark put together. So Mark, did you want to share your screen?
Great. So I've known Aehr for a long time. Met with Gaines several years ago, heard the story, and sounded like what I call a great find. You know, that's the story that you hear about. The company gets you excited, and they're not quite there yet, but it sounds like whatever they're going to do, it's going to be big. Okay, they tell you what it's going to be, and you're excited. All right. Well, that's the way it was for them. Now, we thought that would all come to fruition a little bit earlier than it did. The reason why it didn't was a couple of reasons. One, they test very complex types of semiconductors. It's a very specialized solution, and you really needed the world to move to a place where their solution was really needed, to the point where semiconductor manufacturers were compelled to use them, as opposed to saying, this is just nice to have, and why should I deal with yet another small vendor when I can just continue doing what I'm doing already. Okay, that was problem number one. And second problem was simply a matter of, we went to COVID, and at the time when a lot of the solutions that go right down their path came to fruition, but COVID knocked that down. So now what we have is a situation where the story hasn't changed. Okay, we had a long wait time for what seemed like a great story to come to fruition, and now we're seeing that. All right, there is pent-up demand. This should have happened last year, in my opinion. right? But what we're finally seeing is a situation where the company, the product that the company provides, which has patents, a lot of expertise behind it, we've done a lot of work. There isn't a great competitor to this. We'll talk about that as we go through the transcript. This is the best game in town for what's happening right now in these segments of the semiconductor market, particularly electric vehicles. That's going right down their alley, and now they're seeing orders, and it shouldn't come of any surprise, right? It took a while, but now that we're seeing the demand from the electrical vehicle market, it should come as no surprise that they're the ones that the doors are being knocked on. Okay, simple as that. As far as we just as a starting point. Now, if we get into the transcript, you'll actually see all this unfold. Okay, all you need to take as a leap of faith for me is that we've done a lot of homework over the last few years and confirmed A, what the product does, and 2, that they don't have any real competition for what they do. If you take those 2 leaps of faith, then everything else becomes easy to understand why the business is taking off now and why that should continue going forward. Okay, so let's take a look at now what I've done here in this transcript is it's an edited and shortened transcript. So, to go through the whole transcript, it would take us hours, right? There was probably maybe close to a 1-hour call, and if we talk about it in between. So what I like to do for my own purposes is go through the transcript, listen to the earnings call live. I might read the transcript afterwards, and then I'll take it and break it down, right? I want to just take all the most important parts of the transcript and take everything else out. That'll make it easier for me to go back and read it again and just have this be a reference point to remind myself if the stock goes down or if the stock goes up, exactly, okay, let me really refresh my memory as to what happened here at this moment when it became very clear that this business is now inflecting to the gold mine phase. Okay, so with that as the intro, let's jump into it. So what you'll see here is these are exact quotes from the company, plus or minus little changes just for reading comprehension. Okay, so you can check some of this out yourself as we go along, but I'm gonna just get right to the nitty gritty so you can see exactly what happened in this call that really got me excited over and above what we've been seeing for the past few months and what we knew this company always would become eventually. All right, so you see the improved business momentum, you see the strong increase in customer demand, you see the huge jump in sequential quarter-over-quarter growth. Okay, so you see all that in the opening paragraphs. It's very clear that the CEO is not talking about what might happen down the road, which has been the problem with this company. I actually got rid of almost all of my stock, if not all of my stock at one point, because it became clear these guys are in wait time and the CEO is not good at articulating when he's going to come out. He's always saying we're going to come out. Okay, well, guess what? This time he didn't say we're going to come out. He said we're out. And here's the numbers to prove it. Here are the orders to prove it. Totally different story than anything that I've heard over the last few years from this company. Okay, so big growth, 45% sequentially quarter over quarter, and up over 100% year over year. Profitable on a GAAP basis. This is a very high operating leverage company, by the way. That does not get described in the transcript, but what that means is if they get 60% gross margins, and they don't right now, by the way, but that's because they have overhead. Okay, so what you really want to understand about a company, especially a company like this, where I say they have high operating leverage, you can figure that out yourself just by contacting the company or looking how the margins move with revenue. So as revenue moves up, you can see that margins move up dramatically. That's the sign that they've got a lot of overhead to cover before they start making a really good profit. Now, the other way to confirm that is just to call the company. You can call IR. That's what they're there for, investor relations. If you're an investor or an interested investor, you can call them up and there's no stupid question, right? And you can ask them point blank, the next machine you sell, in addition to the margins that you're getting right now, the next machine you sell, what are your margins on that machine going to be? And what you'll find is that additional revenue is going to come in at 60% gross margins. So never mind what their margins are now, 60% is what they're going to get on each incremental dollar. All right. Now, if you ask them beyond that, what's it going to cost you in terms of additional R&D, in terms of sales and marketing, administrative expenses, blah, blah, blah. How much do you have to expand your organization to support that extra dollar, an extra $1 million or an extra $10 million of revenue? And the answer is almost zero, right? Once they have the executive team and the people that are there getting into these customers, once the customers start ordering, there's not a salesperson that gets a cut of every deal. There's not a ramping of the organization that's necessary. There's very few customers that you call on for this type of solution. And once they start buying, they just buy, rattling it off. So what happens is once you cover your costs of goods sold, right? And their systems, if you go to your systems and the consumables, that's about $4 million. About 2.5 million of that is profit. And it just kind of drops to the bottom line, all right? At least to the operating line, the pre-tax line. But taxes aren't an issue either for this company because they have a history of losses that carries them through until those are net operating loss carry forwards. Until they go through all the losses that they've had in the past, they don't pay any taxes in the future. And that's a benefit to accrues to us that was paid for by shareholders in the past, all those losses that they've accumulated. That's a hidden value in the company that I estimate it's worth about $20 million, which is a huge chunk of their market cap, okay? So what we're gonna see now is as the orders roll in and the revenue ramps up, you're going to see a lot of that money drop to the bottom line, and it's going to be in such a way that it could be fairly easy for this company to get to the point where they're making $1 of EPS a couple of years down the road. Give that a 20p, and you're talking about a $20 stock from this $3 level. 50 cents even, times 20, it's a $10 stock. That's a triple from this level. And it's very easy for them to do as the orders start coming in, and that's exactly what's happening. Okay, so as we continue down, what you'll see in the fourth paragraph is, or the fifth paragraph is, silicon carbide power semiconductors have emerged as the preferred technology for battery electric vehicle power conversion. I'm not going to get into what that means. You can look it up on your own. But the bottom line is, silicon carbide is something that was the use of silicon carbide as a power conversion medium was pioneered by Tesla. And it immediately gave 10 to 20% increase in how far the battery will take the vehicle. That's huge. It's a big competitive advantage that the other manufacturers are not going to cede to them. In other words, silicon carbide, as it states here, is going to only get bigger. It's going to be the de facto standard. As of right now, the only thing that's holding that back is that a lot of the manufacturers are in the process of figuring out how to do it, where to get the silicon carbide from. We need the stuff to get manufactured in a way that is consistent and reliable. And right now, my research leads me to conclude that Tesla is getting most of this silicon carbide in the marketplace, okay? And more importantly, for the purposes of our investment in Aehr, is that their product, the Fox-P family of products, is the most cost-effective solution that I can find out there for testing the reliability of these semiconductors. And why is that important? It also says in the transcript, the full transcript, I think I might have cut that out, but bottom line is, if this semiconductor fails, the car just stops. It doesn't work anymore. That's not good for business, right? If your laptop breaks down when you first get it, you take it back to Best Buy, they fix it or they give you a new one, no problem. Your car breaks down, that's not so good, okay? So Tesla and other manufacturers are going to want to make sure that this product that this semiconductor is absolutely almost foolproof. This thing should not break almost at any time. You don't want to be going 80 miles an hour down the highway and all of a sudden the power cuts out of your vehicle. All right. So they're going to make sure that this thing works well. And the way to do that is through Aehr's product. And that is the best way in terms of cost per semiconductor and the amount of space that it takes up. And it's not even close. It's about a fifth of the cost in terms of the actual per semiconductor testing, and it's like 1/20th of the space that it takes up in the actual facility. Okay, and if you know anything about what it costs to make a clean room, and that's where the semiconductor, a lot of the work is being done, you cannot have clean room is I won't get into it. You can look up what a clean room is, but it's a very specialized place, and it's not cheap to put together. So you care about space and you care about cost, and they offer both in spades. All right, and that's clear not only from our research but from this transcript. All right, let's try speeding this up now. Okay, I put a lot of things in bold that you can read yourself in terms of the demand for the systems as well as the wafer packs. There's consumables. Once you buy a system, that's not the end of it. You've got to maintain that system. Okay, and so that's what a consumable is. And those things carry higher gross margins because once they know you're locked in, like the razor blade razor model, they can charge you a price that gives them a very high profit on consumables. And over time, what's going to happen is they're going to have 50% of their revenue coming from consumables. You can do the math and figure it out based on the systems. Once the system gets installed, how much, once the system's in place, it's been bought. That's it, right? But after that, there's this continuous stream of revenue that comes in from the maintenance, the consumables, and that carries high margin. And over time, that's going to become 50% of their revenue. So not only are they going to be a valuable supplier of this testing equipment, they're going to have a recurring revenue business, and that's going to give them a higher revenue multiple. So not only are we in a situation now where we can see clear to them having very strong earnings in the future, we can see clear to them becoming a recurring revenue business so that not only do they grow because of the growth in their earnings, but they're going to have multiple expansion as well. Because obviously a recurring revenue business gets a higher P, a premium P, and a premium revenue multiple. So the market cap will expand along multiple dimensions, even as they grow along seemingly you would think to be one. On the income statement, right? What happens there is they're still going to make what they're going to make, but the quality of what they're going to make is going to be higher because it's not 50 cents of EPS that they have to repeat next year starting from zero. It's going to be 50 cents of EPS where like 30 of it or 40 of it, because of the gross margins, is in the bag already for next year, and they're just going to be adding on top of that. That gets a higher multiple. Okay, so in the italics, I give you some of what I just discussed right there. And so you can read through that and maybe get a more concise version of what I just discussed with you guys. All right, so going down further, so there's a chart there. What you'll see with Aehr is that because it hasn't been time for what they do, the stock has been in secular decline. All right, where we are right now is a point where the stock is ready to break the long-term downtrend, right? And so for people who like charts, the breakage of a long-term downtrend is, of course, moonshot. This thing should take off, right? So this is part of the StoryTrading 4 pillars, and I do pay attention to that, not because I believe in it academically, but because if a lot of other people believe in it, then it becomes true, right? So for me, though, what you see in this chart is a line that goes up, right? And to the right into the future. And when I look at the valuation of this company relative to what it is now, what I think the stock should be going for, the chart actually does reflect nicely what I think we're going to see in terms of the justifiable valuation of this company. Okay. I believe right now this stock can support a double-digit price and not be called a crazy valuation. It would be a very fair valuation from the standpoint of what I see. And then it grows from there, right? So you see those future years out, the stock can really rip. It can triple overnight and then grow at a very nice rate after that. Once it reaches full valuation, it'll continue to grow because of the growth of the company. And so the funny thing is, from my perspective, get that centered. Okay. From my perspective, right, I don't need this to break, right? A lot of other people do. To me, it's already worth this. I've already been buying the stock more and more and more the last few weeks, and even more so in after hours once they announced the earnings. I'm buying it. Okay. And what's going to end up happening, the reason why this resistance eventually breaks is because fundamentally oriented people like me, professional analysts, institutions, you name it, they buy so much to the point where it just breaks the supply. Because there's a lot of people that are going to sell at this resistance level. Who are they going to sell to? Me, my colleagues, blah, blah, blah. We're putting big money in while small money is filtering out, right? Little day traders, et cetera, et cetera. And once we outnumber them in terms of dollar for dollar, then this line will break. It just has to. That's how that works. That's how these technicals happen. And once that happens, then everybody says, oh, everything's okay. Meanwhile, I've been like, it's been okay. It's already okay. As far as I'm concerned, this line is already broken because the fundamentals have broken to the upside. So in my mind, this line doesn't even exist anymore. We are already in this. It just so happens that might it drift here before going to here? Sure, it can. Or it just might break on Monday and keep going. I'm not here to guess that. I didn't get rich by guessing that. I got rich by knowing that it belongs in this uptrend already. And this is what I do time after time after time, is predict the breakage based on the fundamentals. All right. How are we doing, Ben? You want me to speed up, slow down? Is this going good for you?
Yeah, good. Maybe speed up a little bit. We've got a lot to talk about, but this is awesome.
Sure. Okay. So, if you look at some of the bold print here, engaged in discussions with several other major suppliers of silicon carbide, it's obvious, right? If this stuff works, it's a competitive advantage. So everybody over time, in my opinion, needs this. How many of them buy it? To me, honestly, from what I've seen, any smart manufacturer of silicon carbide semiconductors should be buying this. That's my opinion. Okay. So now even a small percentage of them do, the customer they have right now that's making the stock take off is a relatively small vendor of the stuff. And they're already in promising discussions with several others. The dominoes are going to fall, right? It just makes sense. All right. So, and they already have customers that have been using them for other purposes, that want to use them for this purpose. So they've already been proven. A lot of these manufacturers are getting to know them for the first time, but some of them aren't. And the ones that have already used them before are going to be quicker to jump on. So you're going to have multiple dimensions of growth. You're going to have the existing customers buying more, the customers that have used them for other purposes before using them for new purposes, and then buying more for those purposes. And then the folks that don't know them so well, starting to buy them from scratch. And what that's going to do is going to create this steady stream of new customers. And then as that stream of new customers builds, each customer is going to start growing on its own right. So you're going to have multiple dimensions of growth for revenue. So you could actually see revenue accelerate very rapidly. And I've seen that happen before with testing equipment type players. Okay, so let's just scroll down a little bit. Some of what I've discussed is already discussed through here in the bold stuff. So we covered a good deal of this. I provide some industry research in terms of how fast the industry should be growing. They provided that as well. And what's crazy about these numbers, it makes it very easy. When you can see how many millions of units of electric vehicles are expected to be produced per year, you can figure out how many semiconductors are going to be produced per year. And their machines can test a certain amount of semiconductors in a certain amount of time. So it becomes very easy to do the math and figure out what their potential revenue stream is just from silicon carbide. And when I do that math, I come up with upwards of $200 million per year. Now let that sink in. We're nowhere near that right now. Okay. And if this company gets to 200 million, anywhere close to that 200 million, they're probably going to be getting a 5x multiple on that. This could be a $1 billion market cap company over time. And if I'm not mistaken, that works out to about $40, $45 a share.
And Mark,
that's just math.
That's just electric vehicles too, right?
And that's just silicon carbide within electric vehicles. That, there can be other semiconductors. The semiconductor content of a vehicle or anything else in this world is only going to increase over time. Just the silicon carbide piece can be 200 million over time as their potential. Okay, that's the math. How much of that potential do they get? That's a good question, right? If this was a highly competitive industry, maybe getting 10 or 15% of the market would be great. But in semiconductor testing equipment space, that is a winner take most or a winner take all market. So whereas 10% might be nice if you are a laptop maker, 60% is what's nice if you are a semiconductor equipment manufacturer. And somebody asked, what does over time mean? Over time is just however long it takes them to get from customer to customer adoption. Okay, they could support 200 million right now, just about. In terms of capacity, I think they can support 150 million. But in terms of their opportunity, there's a scenario where all of the manufacturers say, we need this right now. Let's get this right now. They go in, test the stuff out. It takes a little time, a few quarters. And as soon as next year, could they do 200 million? Would that shock me? No. I'm not going to predict that, but I don't need to predict that. The way I make money is to see enormous potential in a company that has a very clear path to growth, right? And then I can say, okay, this is great. This could be a $50 stock. Beautiful. But I know it's very likely going to be at least a $10 stock. I would be willing to pay much more than what it's going for today if I didn't already have my position in place, because I think the stock right now is worth $10, going to 20, going to potentially 40 or more. If they don't get bought by then, because in this industry, that's what ends up happening to small semi-cap equipment vendors. Okay?
Well, great, Mark. We'll go to the questions at the end. They're coming in chat, but let's finish their
Sure.
remarks. We'll get to the questions now. But there was a correction,
you got it.
Clarification here, which is correct by Todd, that from the conference call, they said their capacity is 40 million a month, which is close to $500 million a year with their current manufacturing.
Okay. Gotcha, thanks. So what I probably messed up, what I do know is that maybe it's the total TAM, not the silicon carbide TAM, but their total opportunity. I might have done the math on that and determined that they're 2/3 of the way to that level of capacity, that over time. But yeah, I remember that number. That's almost $500 million a year that they could do without increasing their capacity at all. That speaks to how much profit can drop to this bottom line for a long time to come. And that's not atypical in the semi-cap equipment market. Okay, so listen, I'm not going to get into some of the other stuff that we're going to see here. What you see on my screen, you got silicon photonics is mentioned, 3D sensors, all that stuff. I don't even need to get into that. For the sake of time, just know that silicon carbide is happening in a big way now, and that is enough to propel this company to hundreds of millions of revenue. Okay, silicon photonics. There's going to be 3D sensors. Obviously, is a big thing now. It's already going. This phone that I'm using right now to broadcast this has a 3D sensor in it. Okay, we're going to see like amazing. Go to YouTube and look up uses for 3D sensors, and it's going to be insane. All right. You will be using that for Amazon for sure. You'll just point at an item. It'll identify the item based on the 3D image of the product and the actual picture, the 2D picture of the product. And it'll say, oh, I know what that is. That's that. Is that what you want? And you click yes, and you have bought that item on Amazon. It's going to be absolutely monster. So that is what got me excited originally about Aehr. But then silicon carbide just kind of came and took over and really took off, right? So what does that tell us? That tells us that there are innumerable different things that are going to come up in the future. I bought this company because of silicon photonics, only to have silicon carbide be the thing that really makes the stock take off. That's what happens when you find a company and a story like this, that they make something that nobody else makes to handle sophisticated semiconductor situations. And now we've reached that point in time in human history, in technology history, where semiconductors are getting so sophisticated in terms of the needs for testing that this hits gold mine. So I don't think about, is silicon photonics taking off or is silicon carbide taking off? No, the concept is taking off. And I don't know what the next one's going to be to take off. I just know there is going to be a next one and a next one and a next one. And all I have to do is keep my eye out on the competition, because as long as that doesn't become fierce overnight, and by the way, they've got a lot of patents to keep that from happening, this company could become monstrous, absolutely monstrous over time, if you think about it from that perspective. All right. So we're almost done here. So one thing that was really exciting is Wall Street's estimates for this year was 20 million going into the call, and they raised those expectations to 28 million, making it clear that that number is very safe in their opinion. Okay. The reason why they didn't want to give what they feel they can do is twofold. One, they've missed expectations before. Two, going through COVID hurt that as well. Three, they really don't know how many orders they're going to get. To my point, it only makes common sense that every silicon carbide semiconductor manufacturer, every electric vehicle maker should want downstream to have Aehr involved in the process. And that can happen kind of overnight. They've got a customer that needs more and more of these machines as they ramp up production. And by the way, that customer is probably going to have an advantage in the marketplace because they're going to be more reliable. Their semiconductors are going to fail less. So their customers are going to buy more from them. And that's going to actually even more force the issue for the other manufacturers to say, I need to do this because I'm losing business to these guys. So going back to the guidance, what that means is Gain says 28 million. He feels that's safe, but he was asked, he said that there could be considerable upside to that number. And when asked, what does that mean? Does that mean, a couple million, 10%, 30%? He didn't really want to get into it. They said, well, is it 28 to 30 million, or is it more like 28 to 36 million, just in terms of magnitude? And he said the latter. I'm not going to say more, but it's the latter. And that's crazy. If you do the math on what the difference between 28 million and 36 million is, it's a huge difference in growth rate versus what the expectations were. We already raised expectations from 20 to 28. That's an 8 million raise. And he's already saying that it's more likely that considerable upside represents another 8 million on top of that versus 2. So this isn't like a sure forecast that he has in place. He's got a sure floor and an unsure ceiling. Again, that's what I love to see in a company, a sure floor and an unsure ceiling. Unlimited upside and very little risk. That's risk reward. Okay, they went into Q&A. You can read a lot of that on your own. Some of this I already discussed. Okay, let's see. We talk about the market size. in terms of silicon carbide. There's the quote talking about Tesla and Elon Musk. Okay. And, if you do your research, it becomes very clear that Tesla, having been the pioneers in silicon carbide utilization, is utilizing silicon carbide. It's common sense, right? And that a company that provides silicon carbide semiconductors at a competitive price with higher reliability is probably selling as many as they can to Tesla. Ergo, Aehr is tied to Tesla. Aehr's product is going towards Tesla's product. And I have no doubt about that. There's some more things here. That was what I just scrolled through, is Gaines, like layman's explanation. So you read that on your own time of what their role is in the semiconductor testing world. Okay. And then finally, here's the exclamation point. It's like the final dunk, the final alley-oop dunk of the game, where they're winning by 20 already, and they just gonna hammer it home. This is, this was the big win. Every electric vehicle is going to have silicon carbide in it. Every one of them. That was his quote. Drop the mic. Okay. By the way, this is why it's great reading these transcripts, right? They're really boring until you find one like this. It's an Easter egg hunt. There's the quote there in terms of their ability to scale to hundreds of millions in terms of capacity. And I think that just about covers the most important aspects of this. Yeah, it does. So there we go. That is pretty much what it's like going through a transcript, with the exception of I took a lot of the stuff out that you wouldn't necessarily want to read, but it's sifting through that stuff that gets you those golden nuggets that tell you, shit, I got to go buy a ton of this stock before everybody else catches on. And that's exactly what I did.
Yeah, Mark, that was amazing. I had a big smile on my face the entire time you're making that presentation. You touched on everything that I wanted to highlight. If you guys have questions, put them in the chat. We'll come back to it at the end, but I do want to comment on a couple of things. First of all, I loved how you brought in the 4 pillars at StoryTrading, and I'm reminded of a time when you characterize those 4 pillars more in terms of a stool with 3 legs. You have fundamentals on the top, and then you have sentiment, catalysts, and technicals as the 3 stools. And I think we have a really interesting opportunity in front of us from a trade perspective, because I view sentiment, some people may, view sentiment as something to be dismissive of. It's something that's not based in reality. It's just emotional. I have a different view of sentiment, which is why it's such an important part of the 4 pillars, and which is why I think it could be a stool underneath the fundamentals. I think sentiment is the market's way of speculating on future growth. Right. So, sometimes retail investors can be made famous for driving up stocks based on sentiment, but there's a logic behind it. The logic isn't just I'm emotionally feeling good about this stock. The logic is I see things in the news which I think are going to impact future growth. Now, maybe they don't know how, maybe they don't have a DCF spreadsheet, but this is one of the most exciting things to me about this company right now, because the EV space is huge. It's hot. It's something people can understand. And I want to know, how do you consider that when you're doing a DCF analysis? Like you said, they could be, their revenue could double, triple, quadruple in a very short amount of time. You don't know that. So that's all speculation, which is baked into sentiment. And thought of it that way, there's a possibility the stock can go to $10, $20, $30 this year. So how do you take that into account, Mark, in your trade strategies when you're talking about, you have the value channel? Sentiment's important.
Right. Yeah. Look, I got to give you credit. The world has beaten a path to the story trading door and forced me to, I've never been one to be an old dog, new tricks kind of guy. Right. I took a Warren Buffett taught, and I said, I can do one better and one better and one better. And what we see now is, and by the way, this actually is, so I'd say sentiment is more important on the retail side than the institutional. On the institutional side, you could call it sentiment, right? But that sentiment is based in that fundamental DCF analysis that says oh, this stock is worth 10 right now. Let me call the broker, buy, $5 million worth of this. And, we don't care if the price goes up to 8 because we're getting a bargain even at 8, so buy, and this is how it actually a lot of times works. They'll put an order in place and say, let me represent upwards of 10% of the volume per day, and just keep buying until I have $5 million worth of shares. That actually happens. Okay. That's sentiment, I guess. But in the retail space, sentiment can be much more powerful because DCF isn't as prominent. All right. So what does that mean? It means the stock can go anywhere. It can go well beyond what it's worth, AMC, GameStop, because that sentiment's there. Nothing's there to stop it from going up. A larger company, what's there to stop it from going up are the institutions saying, hey, I thought this was worth 10. It's selling for 20. My lucky day, sell this thing because I don't want to own something that's worth 10 that's selling for 20. Okay. And so they'll actually be able to hold something back. For a retail company, for retail stock, that doesn't exist as easily. There aren't big institutions looking at this stock. If this thing gets into the double digits, am I going to be taking profits? Yes, but I'm just one of few professionally trained folks out there saying, I like this stock up to $10, $12 a share right now, and then add another 50% onto that 12 months down the road kind of deal. But if I'm overwhelmed, if I'm 1% of the people involved in the stock, there's no reason why this stock can't go meme like the other ones, because like you said, electric vehicles are hot. And this isn't just some smoke and mirrors type company. This is a real company whose products are being used to make Teslas. That's real.
Yeah, absolutely is. We're going overtime, but I got to touch on one more thing. First of all, man, I'm so sold on this. I wish there were options on this stock. There aren't. I emailed support@cboe.com. It's under review, but I'm sure demand doesn't hurt. If anyone wants to email support@cboe, not only necessarily go long, but I know that there's going to be a lot of volatility in this stock. So it's always lots of different types of trade opportunities come in, even the sell options. So I would love to see options on this stock. One other thing I wanted to talk about, Mark, you touched on it. You went into in depth, actually. I think it's one of the most important things. On the conference call, there was an exchange about competition. And they went through it in detail. Like, what are their alternatives? And they said,
Right.
the manufacturers can put like a generic solution together, and they went through it, but it wouldn't be as cost. It's like what it will be. Their solution is like 80% cheaper, right? And they said,
right, 1/5 the cost,
1/5 the cost,
and
right?
1/20th the size.
Right. And if they want to copy their solution, they have all these patents, right? So I think this is the most important exchange. And it would be good. I would personally like to, if to the extent I can, independently verify that. I think that's the most important thing to keep, because if that's true, why wouldn't they get 60, 80, 100% of the market if that's true, right?
Right. No, and that's exactly right. And by the way, I'm keeping it layman, right? And I like to keep it layman for myself, right? I'm not an expert on semiconductors or semiconductor test equipment. So no matter how fluently I can articulate what these guys do, that doesn't mean I understand it. And that's where I lean on experts, right? So as long as I understand at a general level, hopefully I didn't go over anybody's head. I try not to go over my own head. And there's certainly a couple people on this call that can explain a lot of this in greater detail than I can. But what's important is to understand the concept and not get caught in the weeds of it all. All right. So bottom line there is, I have confirmed personally through third-party sources that there isn't anything else on the market right now that can do what this does at anywhere close to the price or anywhere close to the size. That's not a surprise, because prior to now, there was no real call for it. So you haven't had any startups for sure saying, oh, we're going to make testers that blah, 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 because nobody needed those things. Nobody needed these testers. This company's happened to be around, and frankly, it was kind of a mistake for it to be around this early in the game. But now here they are in the right place at the right time. And for anybody to do the same thing, they're going to have to bust their patents. So
yeah,
they're in a great position.
And another key thing to keep an eye on is the sampling volume versus doing the full production. And they explained that in the conference call as well, right? Like some past business they had with Apple, all they needed to do was sampling volume. I imagine this is one of the things that the bears or the shorts or, people who've been a long-time shareholders, they may not understand that. They may be pessimistic about that. Oh, these are not going to last forever. Tesla will just do a sampling. Those two areas, the competition, and is it really needed for each semiconductor, or is there sampling? I mean, if we have that nailed and we're right about that, this could be easily a $1 billion plus company in the foreseeable future, I think.
Yeah, and there can be sampling involved, sure, but that all that does is cut the ceiling down a bit, but not the floor. We understand the floor, we just don't really understand the ceiling. So if we're trying to figure out if this stock should be 12 or 20 or 40, what do I care? Talk to me. Let's worry about that issue when the stock's 10, not 3.
All right, great. Very last point I want to make, and then we'll move on to IRIX. Again, if you have questions, put it in the chat. We'll come to you at the end. The last point, just a clarification, Mark. You mentioned, and they talked about this on the call, that the alternative is not failure. The competitor EVs are not just dying in the streets. They are doing the testing. It's a matter of the cost, right? So all the competitors are testing these things, and the sale here is the cost savings.
Right.
Okay.
Right. And that's exactly it.
Okay, great. So yeah, sorry.
Yeah, and a comment was made that 100% of silicon carbide is being tested today, so there's not sampling being done. So what's great there is you get as folks pick up on these little hints, right? I wasn't worried about that, and thank you for that comment. I think it was Ashleigh. That clears that aspect up for me, but I wasn't worried about that because I was more worried about how do I clear up enough space to buy as many shares as I want to buy, because this thing's worth 10. When I'm done buying all those shares, I can go back and figure out if it's 10 or 20 or 40, but I know it's at least 10. Yeah. So let me worry about buying the stock right now and worry about figuring out if it's 10, 20 or 40 later.
I'm with you. Before we get into the Q&A, real quick, just wrapping up a couple slides. Events coming up. You go to StoryTrading.com, click on events up there. You'll see we have Dario, CEO, coming this Wednesday, I believe at 3 p.m. Eastern, so you can check on that. We have a constant flow of great events here at StoryTrading. Please follow us on Twitter and YouTube. Like, retweet things. It helps get the word out. So with that, we're going to go to our VIP section. We'll have a Q&A with Mark. I know it's late where he is, so we'll try to make it short. You can also continue collaborating if you're a VIP member in the IRIX and Aehr research groups and in the VIP chat room. We'll talk about the Surfside collapse. We brought it up a couple weeks ago in terms of trade ideas. We'll give you an update on that, and we'll get into trade of the week. Last week, Aehr was trade of the week that I picked, and up 25%. So hopefully we'll have another great trade of the week segment today. So thank you, everyone, and we're going to move into our VIP section now.